Hello, ladies and gentlemen. My name is Greg Michalowski for ForexLive.com. Today's date is September 12th, 2014. We're ending the week. We're going to do a little bit of review of the week, what happened here, what the bias is for the dollar versus Canada, and why, and then take a look at a little bit of a preview for next week, what to look for, what levels are in play, what levels do you want to see the price either stay above or move below, depending upon your position. Before we get started, let me remind everybody that if you like this video, just click the subscribe button on our YouTube channel. We really appreciate that. And also, if you want information in regard to foreign exchange, maybe you're new to foreign exchange, maybe you want to learn more, make sure you visit our site at ForexLive.com. It's one of the top viewed sites on Forex, on the internet. Make it yours as well. Let's take a look at the dollar versus Canada. We'll start off by looking at the daily chart here. So there's our daily chart, and it kind of looks like a bunch of up and down consolidation type of trades. Market moved up, down, and these lines represent moving averages. The green line is our 200-day moving average. The blue line is our 100-day moving average. Those are simple moving averages. And this move to the upside got its base from these moving average lines. How do I mean that? Well, if you look at the 100-day moving average, the market had all the opportunity in the world to move and extend below the 100-day moving average. In fact, it tried once, twice, 3 times, 4 times, 5 times to move below that 100-day moving average. Did we get many closes materially below that 100-day moving average? And the answer is no. There always tended to be a buyer underneath that pushed it up, 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 and a buyer underneath that pushed it up. This last day was last Friday, was the unemployment day. And the market had weaker Canada unemployment, weaker U.S. unemployment, didn't know what it wanted to do. On Monday, it had an idea of what it wanted to do. It came in on Monday, and if we take a look at the hourly chart on Monday, is right here. And the green line represents the 200-hour moving average. The blue line represents the 100-hour moving average, just like the other chart, except we're on the hourly chart. And we opened up Monday just below the 200-hour moving average, and that was the low for the week. We started to move above the 200-hour moving average. We started to move above the 100-hour moving average. We started to move above the 200-day moving average, which is the overlay on this chart. You can see D1 moving average 200. So we moved above that, and that was a catalyst. That was the epiphany, if you will, for let's go to the upside instead of the downside for the dollar Canada. In other words, we had enough time to go below the 100-day moving average through here. Go back to my daily chart. We had all these opportunities to go lower here, and it couldn't go lower. So if you can't go lower, which way are you going to go? To the upside. You can put a positive fundamental story on it, why the dollar, the dollar was bid up this week, the movement out of the risk currencies. We saw Aussie, we saw New Zealand go to the downside. Same goes, they tend to be bucketed with the Canadian dollar as well. So all those things were maybe stories why the dollar Canada moved to the upside. But the price action and the tools also told you a story. They told you the bulls were in charge. And taking charge through here. So what do? We moved all the way to a high here, and then we started a corrective move to the downside. And I'm going to put a Fibonacci retracement on this move to the upside right here, just to measure that. I measure corrective moves. And what I want to see is I want to see the price find support in between the 38.2 and 50% retracement on any sort of correction of a trend-like move. And this move to the upside from the low right here, if I can get there. Well, I can't, so let's go over here. This move to the upside here is a trend-like move, fast directional, especially through here on Monday. And we started to correct. And what else did we form here? We formed what is called a bull flag. Flagpole, bull flag. Now, it's made up of trend lines, parallel trend lines on the top, parallel trend line on the bottom. And you can see when the market had to make up its mind right here of which way to want to go. Did it want to break lower and retrace all the way back down, moving below the 200-day moving average in the process? Or did it want to find support and move higher? What did it choose to do? Find support. What is also right here? What's the blue line? 100-hour moving average. Market found support against the bottom side of the trend line. Market found support against the 100-hour moving average as well. And that was enough to define risk and limit risk against this area. Probably stop below the 109.25. Buy here, stop below that level. We'll see what happens. And the market moved higher. That's a trade I would do. I would look to buy against that support level right there. And so the market did find support. It started to move higher, and we're ending the week, as you can see, or moving into the week near the highs for the week. So what does this say about next week? Okay, well, it says that the buyers remain in control, don't they? The buyers are above this trend line now. The buyers are above any sort of corrective move of this move to the upside here. The 38.2 to 50% retracement of this move to the upside is right here at the 110.08 level and the 110.25 level. So this is going to be a support area for next week. We also have the high from Tuesday that comes in at around the 110.31 level. And also these lows right here, the low for today came around that 31 level. So we had a high here, we had a low here. So this area right here is going to be my key support in next week's trading, folks. Initial support. If the market can stay above that level, who's in control? The buyers remain in control. If we move below that level, who's losing control? The buyers are losing some control. It doesn't necessarily mean the buyers or the sellers are taking full control back, but they are winning a battle getting below that level. Now I'm going to bring up another level right here, the 86.96 level here, and it doesn't look like the market. Why do I have this area quartered off here in a yellow zone? Well, I have to go back to the daily chart, and if I look back at the highs going back to August, this high came in at 86, this high came in at 96. If I go back to this month in May, we had a high here. We had some lows here in the month of April around this area. So we moved a little bit above it, and then we moved below it. And you can see that it kind of dissected or it was an area where the market paid attention to, even if it was just in August. And so although the price going back to the hourly chart moved above this 86 and 96 level through here, we tried to find resistance here. We came back down. We fell below it. We tried to stay below it. We couldn't do it. We stayed. But during this correction phase, we moved above and below it. That's okay. But the last thing that we did right here was find support against the 86 and 96 level right here, and that pushed the market to the upside. So that too is another key level that I'm going to be watching. I look for buyers here. I look for stops below this level. I look for the market to move higher. Where can we go? There's really, the sky's the limit here for the dollar versus Canada. We're kind of in a nowhere land right here. We haven't been above these areas here in a while. Watch the 1052 level. That was a high going back to April. That's going to be another key level. But really, as long as the price remains above, certain levels like the 86, 96 level, I'm going to remain bullish for this pair. Prove me wrong, sellers, by being able to sell the market through those levels. If you can do that, okay, I'll give you the benefit of the doubt. If you can't do that, the buyers remain in control. My name is Greg Michalowski. Good fortune with your trading.